Hey, everybody. Welcome back to episode number 31 of the Real Deal Pod with Allister and Geoff, where we discuss everything mortgage and real estate related, sometimes delve off into politics and some other randomness. But more often than not, we're here to enjoy ourselves and to make you guys laugh with our jib jab, our banter, and our mortgage and real estate insights. It is a beautiful Wednesday afternoon. Gosh, it's sunny. I've been out all day running around, just popped in to do the pod. Got to run back out again to meet with some clients, but I'm here again with my man Geoff. Geoff, how you doing, buddy? How you been?
You know what? I have been doing well. My body is coming off some abuse that we put it through over the
You
weekend.
were telling me about that, man.
Yeah, we did. A friend of mine and myself, we did the infamous Valley Vert Killer, it was called. So they said it was a 20-kilometer trail run with 1,200 meters of elevation. But when it all came down to it, depending if my watch was correct, it was 21 kilometers. They lied, but only 900 and some odd meters of elevation. Um, me and my good buddy JD Demers did that.
JD.
Unfortunately, for him,
I
he
know
rolled his
JD.
ankle in
JD's
the
a
first
great guy.
kilometer. Sorry,
I said I know JD. JD's a great guy.
JD is a great guy. He rolled his ankle in the
Oh
first
no.
kilometer,
Oh no.
and but he finished it.
Oh good.
And I told him I would have quit, JD. Like, what kept you going? He's like, number one, I couldn't tell my kids that I quit this thing after I've been hyping it up for the whole time. And number two, I just heard David Goggins yelling at me in my brain, so I had to finish it. So I was like, good on you. I would have quit.
That's awesome.
And then the next day, me and my girlfriend, we went and ran another 10 kilometers around Burnaby Lake, and uh, and then I just basically died.
Yeah.
Next 2 days were days of relaxation.
Oh man, that is wild, man. That is crazy. It puts my weekend like to shame because I took care of a sick wife, a sick daughter, and got and I have a listing that just went live yesterday. So I was getting all that stuff finalized. A beautiful New York style loft, by the way, in North Surrey. Just a wonderful little property. But yeah, just yeah, that was my weekend. And so when you were telling me about what you did, I was like, oh man, I gotta amp up my game once everybody's better.
It's not that you got to amp up your game, Alistair. You just have to turn 54,
Okay.
which I'm doing here October 22nd.
Happy soon to be birthday, my friend.
And then you just realize, okay, well, I'm going to be going through a midlife crisis here. So should I go buy a Corvette or a Harley?
Nah,
Or should I just maybe get back into shape?
do the health thing, man. Nah, man. I'm not down with the car thing. I never have. I've actually thought that was ridiculous. Whenever heard somebody goes through a midlife crisis and buys their like red Corvette, I'm like that's crazy, man. That's dumb. Like that doesn't even make sense to me.
I would have you seen those new Corvettes that are out?
I know they're nice looking,
Oh,
but
very
still.
nice.
I get an Aston Martin, and since that's way out of my pay grade,
Well, the
I
nice thing about the Corvettes is that they're a slick looking car and they're definitely not affordable, but they're a lot more affordable than other,
100% luxury, yeah, luxury
right?
sports. Yeah, yeah,
So
that is true. That is
so again, out of my pay grade as well, but you know what? To my original point, I stayed away from the toys and I just said, time to get back into
good
shape.
on it,
So
man.
let's get
Good
at it.
on you, buddy. That's fantastic. That's
They
fantastic.
say, Alistair, and we know we did a reverse mortgage pod, and 55 are your golden years.
I
So
know.
I'm 1 year away from getting discounts at Ricky's and
That's
Tim
awesome. I'm so
Hortons,
proud. That's awesome.
right?
I'm jealous, dude. I'm jealous.
But they say as you get into your golden years, the most important things as far as health wise is to have strong legs and a good heart.
That's right. Well, you carry both, my friend. You carry both.
Thank you.
So
Thank
keep it
you.
on, keep it going, keep it going. So I know we got stuff to talk about today. And we're on a little bit of a time crunch because I know you got to run, I got to run as well. But I have a quick question for you from something that I read actually just shortly before the pod. And something came out on from in the Globe and Mail, and it had to do with the recent inflation, right?
Yeah.
And so what they're saying is interest rates still have further to fall, but the feeling is that fixed mortgage rates have already started to near their bottom.
Yeah.
And I wanted to get your take on that.
All right. Well, let's get into it. So, most recent, what's the word I'm looking for? Report is
Yeah.
reporting Canada's inflation rate to be 1.6%, which I believe has been the lowest since 2021,
Yes. So they
right?
got a spike. Yes.
And when last time that Canada's inflation rate was at 1.6%, our prime rate was at 2.45%,
Yeah.
right?
Yeah.
And today, Canada's prime rate is at 6.45%. So
Right.
there is a large conversation having that our next Bank of Canada meeting, which is actually next week, October 23rd, Wednesday, that we may very well see our prime rate drop a half a point.
Yes, because the other thing that I've heard is that now we have to get to a 2 to 2.5% drop in the coming year. So we've
Right.
moved from that
Right.
the 1.75 to the 2 to 2.5.
Right. So to kind of even get, deeper into it, then our next Bank of Canada meeting here is going to be December 13th, I believe.
Yeah.
So again, there's conversation that our next Bank of Canada meeting in December might drop our prime rate down another half a point, which then would make our prime rate going into 2025 at around 5.45%. Keeping in mind that the last time Canada's inflation rate was at 1.6%, our prime rate was at 2.45%. So back to your point, there is going to be a very aggressive movement in 2025 as far as what the Bank of Canada is going to do with the prime rate.
Right.
Now, here's the thing, which is also really important to understand and to note, is that we also have to see our inflation rate maintained at a low
Right.
rate, right? Or
2%.
at a low
They need to go on
percentage.
at 2%. They want to see it maintained at 2%.
So again, there's a lot of this roller, like there's so many things that are so many different kind of variables, but
Yeah.
back to the Globe and Mail, back to your point of conversation, is that as of today, October 16th, we just released our most recent Bank of Canada or our most recent inflation rate. It is at 1.6%. The story behind that now is the last time that Canada had an inflation rate of 1.6%, the prime rate was at 2.45%. The story after that is today's Canada's prime rate is at 6.45%. So what's going to happen in October's Bank of Canada meeting? What's going to happen in December's Bank of Canada meeting? What are my predictions for 2025? So there's a lot of stories that can be created here, right?
Who says real estate and mortgages is boring? Honest to God, come on.
And then back to your fixed rates,
Right?
to your point, as a lot of people feel that fixed rates are kind of where they're going to
Gonna
land,
be.
where they're going to be. And I always tell people, understand that when we talk about variable rates, your variable rate is all about what's going on in Canada. So we've been talking about inflation rate for what, 3 years now, 2 years now,
Right.
and as far as why the variable rate is what it's doing. Fixed rates are what's happening outside of our Canadian borders and what's happening in the bond market, right?
Right.
So if we see the bond market go up, we see the fixed rates go up. If we see the bond market go down, we see the fixed rates go down.
Right.
We then say, well, what determines the bond market as well? What's going on here in Canada? If in Canada it's all unstable and chaotic, people want to put world markets, bonds and world markets. If it's crazy, if if the world is going kind of crazy and kind of going into a recession period or a rejection period of some sort, this is very simplified. People want to take their money out of the market
Yeah.
and stick it into something safe, to
Safe.
the bonds,
Bonds.
right?
Bonds are always
But
safe.
again, let's take a look at what our stock market is doing as of late. It's going gangbusters. It's going
Busters.
crazy. So then people will take their money out of the bonds, stick
And
it back into the
into the
market,
market.
and that has an impact on what our fixed rates are going to do.
Right.
So again, a roller coaster ride. What we will say today might be different than what we say 2 weeks from today, 4 weeks from today, 8 weeks from today. I always say, Alistair, let's take a look at our podcast, what we were talking about 6 months from today. It's a much different story than what we're talking about as of October 16th, right?
Right.
So
It's crazy. This world, man, it really has become a world of hot takes. It really has. There's always something happening. There's always things changing, right? So you
yeah,
can't, it's
it's
really,
like,
I tell people you can't have the same opinion now, right? Because now information changes so quickly that if you have to be able to change your opinion and adapt and go along. It's wild.
well, and the messaging changes all the time
Of
as well,
course.
right? Why did the variable rate go up 8 times in a year and a half? Well, it's because Canadians were spending too much money. They had to
Yeah,
slow it down. The
right?
cost of goods, there was more demand than there was supply.
Yeah,
Then our inflation rate skyrocketed. So it was, hey, everybody, let's slow down. Today's message: Canada's in a recession. We need to stimulate buying. We need to basically control inflation, which now we have, right?
right.
And there are some people that will say that our inflation rate is actually even lower, depending on what you factor into it.
Sure. Yeah.
So the messaging is so different, it seems, each quarter as well, right?
Yeah. Yeah.
Also keep in mind, not that the most recent elections that are coming up have a direct impact on inflation, but lots of different things going on within mortgage rules and mortgage guidelines with first-time home buyers, 30-year amortizations.
Yeah.
So to your point, Alistair, when people say the real estate game or the mortgage broker game is boring, maybe they're just talking to the wrong people.
Exactly. That's exactly it. Well, then I think that's actually a perfect segue because what are we talking about? I think it's how to turn a no into a yes. And so with all this rate news and all that sort of stuff, it's actually a perfect segue into kind of discussing stuff like that.
Well, here's the thing. The one word that most people hate to hear the majority of the time is no.
Yeah, and realtors hear it 90% of the time. I just like to throw that out there.
Well, and here's the thing. When you are going and getting financing and your bank or your credit union or your mortgage broker or your preferred lending partner is telling you no,
Yeah.
when you need to hear that word yes, there are ways to look at your mortgage application
Yeah.
to see if that no can be turned into a yes.
Yeah.
And I think this is a really important conversation to have because there are a lot of times, for whatever reasons, and we're going to jump into them a little bit, where an individual and or a family, when they're applying for financing, a mortgage or a refinance or whatever that need may be, the answer that they're getting back is the word no.
Yeah.
And here is the thing, is that every lender, I'm not going to say every lender, there are things that lenders look at differently than what other lenders look at that can turn that no into a yes, because it all comes down to the debt servicing, right?
Right.
And again, the debt servicing, to keep it really simple, is what is the money coming in? What is the money going out? How much money are you looking to borrow? And are you within the debt servicing for
Guidelines.
a yes or a no, right? So how can we turn no's into a yeses? Very, very important conversation to have. Very important for people to understand that, hey, maybe I can turn my no into a yes. And I wanted to dig a little bit deeper as far as how some lenders will look at certain things versus how other lenders will look at certain things. And all of a sudden, because of how a lender looks at it, that no can turn into a yes. Not all the time, but we've worked on many files, Allister, where people are getting are getting a no from a bank or a credit union. Now the conversation is going to a B lender, or the conversation goes to a private lender. And we've talked about, B lenders and private lenders, the bump on the rates and what the fees look like. But again, maybe we don't need to go in that direction, and we just need to turn over a couple more rocks to see if we can get this thing done with a bank or a credit union. And my shameless plug is, this is why it is so important that people work with mortgage brokers.
Yep. Oh, I agree.
Versus mobile specialists, like a bank's mobile specialist, and not to pick on the TD mobile specialist, not to pick on the RBC mobile specialist, not to pick on the CIBC mobile specialist. But at the end of the day, your mobile specialist has one set of guidelines to work with.
That's what I say. Their car can only go down one road.
Right. A mortgage broker, we're using the HOV lane all the time, every time, where we're having different options and different avenues where we can basically take your file details and have a lender look at it a little bit differently. And again, that no now gets turned into a yes.
So what are like the most common no's then? I mean, I know like one of the obvious is poor credit score, right? Like,
yeah, poor credit score can turn can be an automatic no.
yeah, that's okay.
We've talked about this before, is that your credit score is a report card for an individual as far as how they pay back debt. Do they pay it back on time every time, right? I've used this quote before, is that your income is as important as your credit. And just because you are making a lot of money and you have a poor credit score doesn't necessarily mean you're going to get a yes with a bank. And vice versa, if you have a great credit score and not a lot of income, doesn't necessarily mean you're going to get a yes from a bank. So a lot of times mortgage rejection happens because of a poor credit score. Now, I want to keep things relatively in a simple sandbox, but lenders traditionally banks, credit unions traditionally want to see a credit score of 680 or more. A lot of times the messaging is that if you don't have a credit score of 680, a bank or a credit union or a monoline lender is going to say no. That is the case with some lenders. If you don't have a certain credit score, that is going to be an automatic no with that particular lender. Whereas other lenders may take a look at that credit score. And if there's a reason for why that credit is where it's at, and that reason makes sense, again, that no can now be turned into a yes, right? So let me give you an example. Credit utilization, how much you owe on a credit card to what the balance is, has a 35% impact on your credit score. So if you have all your debts maxed out,
right,
and you still have great repayment history, at times your reporting credit score is not going to be great.
right.
But what happens if that individual is business for self, and or they're working for an employer that basically that individual pays for all their expenses and then gets reimbursed?
Yeah.
And then that's paid off monthly. There is a story behind that where you can have a good explanation why there's high use on credit cards or what they call trade lines. But there's also a reason why that is. And also we can take a look at the repayment history to see that it's paid off on time, every time, because of the situation that they're in, or the type of employment that they're in, or the type of business that they're in, right? Now, that also being said, sometimes your credit score is low because of reporting debt, or reporting, what's the word I'm looking for? Collections, reporting collections. How many of us guys have parking tickets that we don't even know about that are in collections?
Yeah. Hey, you know what? I'll just quickly to touch base on that. I had a friend of mine that had a overdue fine from Blockbuster Video for $4.55.
Right, right.
He didn't even
So,
know. No
so
idea
that,
Blockbuster had gone out of business.
so again, to that point, parking tickets, blockbuster fees, maybe it's a hydro bill that you're unaware of because you no longer live there. But if you have anything reporting to collections, your credit score is not going to be good. But again, if there is an explanation behind it,
Yeah.
you can turn that no into a yes. Repayment history has a direct impact on your credit score. Maybe how many of us do know people that work in the oil fields and they're gone for weeks or months at a time and they don't have the ability to access or make payments to their credit cards? It's not that they don't have the ability to do it, they just don't have the Wi-Fi to do
The
it,
technology
or
to
they just don't have um, usually it's the Wi-Fi to do it,
yeah, the
so
technology.
payments get missed. So again, if there's an explanation behind it, that no can be again turned into a yes. Now, if all your other credit cards and all other loans are reporting missed payments, then it's a little bit harder to paint that story,
It's
right?
tougher to sell.
So again, poor credit doesn't necessarily mean it's going to be an automatic no. At times, and with some lenders, it is an automatic no. But again, that's why, again, you want to have the ability to be working with somebody that has multiple lending partners. And I find credit unions are very, very good at understanding stories when the credit score may not be where it's at, right? There are some lenders that it's just a hard stop. That's their internal policy. So again, I've worked on files and I've seen files that have getting turned down because of credit score that we've turned around and turned that no into a yes, just because we were able to work with lenders and there was a logical story, a make sense story behind why that credit score was where it was at. And then again, that no now turns into a yes. The other thing that can turn no's into yes, because I know you were going to ask me, Alster.
That's gonna go. You always jump in.
I know.
I just let
I
you
get
roll.
excited.
Like
I
I
get
am excited.
excited.
I'm always excited. I let you get on a roll, and I get intoxicated by listening to your stuff. So I just sit back and learn, man. I soak it all in.
It's mesmerizing. It's
Right?
mesmerizing.
That's what I'm saying.
But again, the other thing is on how lenders take a look at lines of credit.
Yeah.
Okay. Be it a secured line of credit or be it an unsecured line of credit. Uh, and I'll use an example. I worked on a file. These individuals had about $200,000 of lines of credit that had zero balances owing on it. So what that means
100
is
different
that
lines of credit. I'm sorry.
they had $200,000 of a
Ooh.
secured line of credit.
Oh, 200,000. Okay.
They didn't owe any money on it. It had a zero balance.
Sure.
But a lender like Toronto Dominion, TD, they will take a look at the limit of the secured line of credit and debt service it,
Take it. Yeah. Yeah. Yeah.
right? So again, if you have a limit of $200,000 and a lender is debt servicing that $200,000, the limit, and you still have a zero balance, that's going to take away from your purchase power,
Yeah.
right? Or that's going to take away from your borrowing power.
Yeah.
Now, again, we can take that same line of credit that TD is debt servicing at 200,000 with zero amount owing, and they're debt servicing the 200 grand because they're debt servicing the limit. We can take that $200,000 line of credit, say to Scotia Bank, and Scotia Bank will say, okay, we understand that there's a $200,000 limit. We also see that there's a zero balance owing, so we're going to debt service the zero balance owing. We're not going to debt service the limit. So again, all of a sudden we turned a no into a yes by on how a lender will take a look at limits of lines of credit versus balances owing on lines of credit and how their internal policy will debt service it.
Makes sense. So really what I'm learning here throughout all of this is you really need to be working with somebody who can understand your story.
understand your story, but also has the ability of working with lending
But
institutions.
that's what I mean, guiding you towards institutions that will that will understand your story. Because if you're on your own and you just decide to go to your bank and go to TD and say, "Hey, can I get a mortgage?" and they say, look at you and say, "Nope." Why? Because of this, and you say, "Oh, right." You don't know what to do next, and that's what I mean. So when you go to a learned specialist like yourself, right? Able to guide them towards the people, right? Yourself, that will help them understand their story and help them achieve what they want to achieve, their
Yeah,
goals.
because it comes down to rules. It comes down to
Right.
guidelines.
Yeah.
It comes down to this lending institution will have different guidelines than this lending institution. And sometimes they'll have the same.
Right.
But again, there's these little nuances
Nuance.
that how each people will take a look at certain things
Right.
that again will turn a no into yes. Rental income, Alistair, is another one.
I know
Right?
that's one that clients deal with constantly when purchasing a new home, right? Especially they'll say, okay, I need to purchase a home and it needs to have a two-bedroom suite. So because I'm going to rent that out so I can, so it helps pay for my mortgage.
Yeah. And when it comes down to rental income, there are some lenders that if it's an unauthorized suite or an
Right.
illegal suite, they will not recognize that rental income.
Right.
Again, there are some lenders that if it's an unauthorized or an illegal suite, they will recognize that rental income.
Which is
There
always
are,
silly to me. And which is silly to me that the banks actually don't lend on quote unquote unauthorized suites because it's really not the owner's fault that the property cannot be authorized as a legal suite. It still has all the factors of a legal suite. It's still generating the same income. It's still all being reported the exact same way,
yeah,
right?
it comes
It's
down
just
to the
you
municipality, right?
That's what I was saying. It just comes down to municipality bylaws on why it can't be deemed a legal suite. And I just think from a lending perspective, that's ridiculous.
Well, and a couple of things that I want to touch on there as well. Understand that a suite or rental income has to be a self-contained space in your house or on your property
Yep.
that has its own door,
Separate entry.
so its own entrance, its own kitchen, its own bathroom,
Yep.
and its own bedroom, right? So room and board is not
Not
rental income,
count. Yes, does not count. Yes, yes. Yeah,
does
you
not
can't.
count.
Yeah. Yeah, you can't have somebody up in your bedroom saying that.
Well, again, you can, but that would be with a B lender, but that's a whole different
Different
conversation.
ball game. Yes, yeah.
Now, even to what I just heard you say, reporting your rental income. There are some lenders that you need to be reporting your income on your T1 General for that rental income to be recognized.
Yes. Yeah.
There are other lenders that they don't necessarily are concerned that you're reporting that income on your T1 General and that income will be recognized. So again, that is turning a no back into a yes. And those are big, huge things is authorized and unauthorized suites, which lenders look at them. Even on authorized suites, if you're not reporting that rental income on your T1 General, again, there are some lenders that are going to say, well, if you're not reporting it, we're not recognizing it. Other lenders will say we're okay with it.
Yeah.
And then there's another way that lenders look at it, rental income, and they're called add backs or offsets or DCR calculators, right? And a lot of times you'll be reporting your income. We'll just paint the story. You're reporting your income. You're in an authorized suite, but one lender will use an add back and another lender will use an offset. Again, that lender that's using an add back will be a no versus the lender that's using an offset will be a yes. Again, it's how they're recognizing that rental income.
Right.
And then there's others that use DCR calculators, which are way better than an offset or an add back. So if an add back isn't working, again, your broker should be finding a lender that uses an offset. If the offset's not working,
Working.
your broker should be now looking for a lender that has a DCR calculator. And again, those are ways that you can turn a
Just
no
quick for
into a yes.
everybody out there, what's a DCR?
A DCR calculator is a debt calculation ratio, right?
Yep.
So how much of your rent is basically going towards being calculated towards your debts, right? So with the DCR calculator, when they're being used, you basically input all the information that you do within their calculator. Within that calculator, it now spits out a surplus or a shortfall, be it monthly or annually. You then take either that shortfall or that surplus, you add it or subtract it to the application, but now you have the ability to wash out all that property's liabilities, right? You don't have to include the payment, the mortgage payment. You don't have to include the heat. You don't have to include the condo fees. You don't have to include the property tax because you've already used the calculator to input. So all that now can be taken out of the application. You now either add in the surplus or the shortfall, and then all of a sudden that turns another no into a yes.
It's beautiful work. Yeah, you guys do magic.
It's not magic. It's working with lending partners that have a different set of guidelines than the ones that don't.
Knowing the resources and knowing where to go, or having the resources and knowing where to go.
Right. Probation periods are another big one. If someone that you know is getting turned down because they're new to their employer and on a probation period, and their income is not going to get recognized until that probation period ends. There are lenders, again, that if you are on probation, but say working within that same industry for a period of 2 years, then we can get an exception to say, hey, we're gonna waive that probation period and recognize the income because it makes sense to do it. That individual has been in the industry for a long period of time. That person is looking at a 2-year average and say that 2-year average is 65,000 and they're going into a job making 70,000. They're not going to be making less. They're going to be making more. So again, probation periods are at times where we can turn a no into yes, again, if it makes sense.
Just to pause on that really quick, because I know we got to wrap up soon because I know we both got to get going. Speaking of the probation periods, if somebody is approved for their mortgage, is it okay to go and quit your job and go get a different one?
Well, the answer to that is no. Don't
Thank
do
you.
that.
Just thank you. I just want to make sure that we're clear, please, because when people might think, oh, so there is an okay probation thing, I might go quit once I've already purchased and got my mortgage. No, please don't do that. Bad idea, terrible idea. That's not good.
Here's the thing. We'll even dig a little bit deeper in that. Don't do that until your mortgage completes.
Exactly. You got the home, you
then you
got the
can do
keys.
that.
Do whatever you want to do once you got the keys in your hand.
Don't do that before, but people do that all the time.
I know they do. That's why I wanted to pause us and make sure we noted, please don't do that.
And again, like to jump a little bit deeper into that, people will get approved for a mortgage.
Yeah.
People will get all the conditions to that mortgage satisfied.
Yep.
They will remove subjects. And then all of a sudden they go buy a new car.
Yes, that too.
Or all of a sudden they quit their job.
Yeah.
Or all of a sudden they incur a whole abundance of debt.
Yeah.
What a lot of people don't understand is that some lenders, not all lenders, before they will complete on that mortgage, they will re-pull your credit bureau
do a
behind
final
the
check.
scenes
Yeah.
and do a final check or a final audit.
Yeah.
And then all of a sudden it's recognized that you've incurred debt, or they're phone your employer. All of a sudden you're no longer working there. Now that yes now turns into a no.
Yeah.
And now you're working in the 11th hour to try to get that no back into a yes. And it's not a pleasant experience for the individual.
Anybody. So please don't do it. Please don't do it. Anyway, sorry to take it off track because I know we got to speed it up a bit, but go on, man.
No, like that's keeping it right in track because again, a lot of people will do that. Here's the last thing that I want to kind of touch on. And again, for anyone that has a no, reach out, see if we can turn it into a yes. That's not to say we're going to turn it into a yes all the time. In fact, most of the times we probably won't. But I can tell you that we will flip every stone.
Yeah.
Right?
It's the biggest thing that's the best thing anybody can do for yourself. I say it on the pod. It's like going to the doctor. If the doctor gives you some bad news, right? If you get told you have something really bad, you may just want to, you're probably going to go get a second opinion just to make sure, right? So it's the same thing with your home. If you can't get what you want, go get a second opinion. I always say, what's the worst they can say? No. Like, let's,
Yeah.
so sorry, go on.
And final thought is recognizing miscellaneous income stream, child tax benefits.
Sure.
That is part of your income. That can be recognized and that can turn a no into a yes. Spousal support. If you're receiving spousal support, that is recognizable income. That can turn a no into a yes. Child support can turn a no into a yes.
Mhm.
Stated income for self-employed people. We turn a lot of no's into a yes when we're working with self-employed people.
Yep.
They have a great business. They have strong gross business revenues. But because there's a tax strategy, they're reporting not a huge amount of income as a tax strategy. Self-employed people, Allister, are getting told the word no all the time because you're not reporting enough income. We have turned many, many self-employed no's into a yes by utilizing a stated income product that banks and credit unions recognize, if it makes sense, by stating the income versus what you're reporting. And again, that we've turned many no's into a yes, because at the end of the day, why? We have lender selection. And if you're working with a lending partner that has the ability and understands mortgage products, be it reverse mortgages, be it self-employed stated income mortgages, be it how lenders look at certain debts that you carry, and are they debt servicing the limit or the balance owing, understanding credit score and why that credit score as far as where it's at. And again, at times, having relationships with B lenders or subprime lenders and or private lenders, a lot of opportunity to turn no's into yes. I always tell people, if you have 20% down, we can turn any no into a yes. You may not like the financing solution for it,
Right. Yeah.
but that is
But
we
it'll
have the
still be a
ability to do
yes.
that.
Yeah. But it'll still be a yes. You may not like all the rules or how much it costs you, but it'll still be a yes nonetheless.
Exactly.
Yeah.
Exactly. So the 30-second windup.
All right, man, let's go.
The 30-second windup, anybody out there that has heard the word no when it comes to financing, please get a second opinion, maybe even get a third opinion, maybe even get a fourth opinion, but get another opinion, because your no could be because of poor credit score, which can be explained into a yes. It could be reporting collections that make sense or you're not aware of. It could be debts that you have inconsistent payments on it, but there is a story behind it. It could be trade lines that you have, like lines of credit, where the financial institution that you've gone to or your broker has gone to is debt servicing the limits versus the balance owing. It could be because you're on probation. It could be because they're not recognizing child tax benefits, spousal support, child support. Here's a big one: foster care.
Oh, okay, yeah, that's something that
Adult care,
yeah.
right? I've worked on many files where it's like, you're making $40,000 of tax-free income in adult care. This is recognizable income,
Yeah, yeah.
right? And more importantly, why can you turn that no into a yes? At times is because of lender selection. If you are working with someone that does not have lender selection or just doesn't have the ability of thinking that there are mortgage products outside of your, hey, I got great income, I have no debt, and I have a good down payment. I said this before, I don't have a 9-year-old kid, I don't have a 6-year-old kid, but my 6 and 9-year-old kid can do that mortgage.
Yep.
Right?
Yep. Yep.
So again, lender selection and working with someone that has the ability to understand the financing world and the financing space,
Yep.
especially for the self-employed. Again, that's where I'm going to leave it off.
That's awesome, my man. Amazing. Well, that's it, man. I think that's it. I've got nothing else today. I just want to thank everybody once again for joining us today and listening to us. I hope all of you enjoyed. Geoff and I truly, 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 as we always say, love doing this for you guys. So continue to listen to us, continue to love us, continue to download us, continue to share us, and tell everybody you know why they should listen to us. We truly appreciate it. I hope you all, Geoff hopes you all have an amazing weekend ahead of you. I think it's supposed to rain out here in BC, so we're all going to try to stay dry. I'm still going to get out there for my walks because I don't mind walking out in the rain. It's actually nice and refreshing. So I hope all of you, wherever you guys are, enjoy your weekend. Get out there, love where you live, and we'll talk to you all later. Peace out.
Y'all have a nice day.
All right. Bye now.